now welcome on board the CBO at Premier Energies. We've got Vinay Rustagi on the show right now. Vinay, hi, morning. Great to have you on the show. Let's firstly talk about this, your subsidiary's latest JV. Tell me, how does the aluminum JV with Nuvama strategically fit into Premier Energies' long-term integrated manufacturing plan, and what kind of returns are you anticipating from this new vertical?
So good morning. Thank you for having us. So this JV is basically about manufacturing aluminum frames, which go into making our modules. Aluminum frames are one of the biggest cost items in the modules. The government is very keen that the imports from China are stopped. So we've kind of decided to make these modules, these frames in-house. And they're all basically meant for captive consumption. So there's a very strong business rationale. We have partnered with New Evosol, who are one of the biggest manufacturers of aluminum frames and mounting structures in the market. So we hope that with their expertise and their management capabilities, we will be able to get the business started in a very short space of time.
Right. Also then tell me, I want to talk about your growth plans here, because the markets are pretty, turning positive over the longer term on your company. What about your, multi-gigawatt expansion across wafers, cells, modules and schedule, etc.? What kind of utilization levels do you target in the first full year of operations?
Yeah, so, we currently have cell and module capacities of 3.2 gigawatts and 5.1 gigawatts, which will go up to 10.6 and 11.1 over the next, I would say, 10 months. In addition to that, we are also integrating backwards into ingots and wafers to basically become like a 10 gigawatt integrated capacity by 2028. So that's a pretty large Capex. In addition to that, we are also entering into new segments. We are entering into batteries. And we've also announced two acquisitions, one in the inverter space and one in the transformer space. So altogether, across all these businesses, we are expecting a total Capex of around 11,000 plus crores over the next 3 years. In terms of capacity utilization, so our facilities have been kind of running at peak rates. Cell plants are running at about 90%. The module plants are running at about 75% plus. And with our management capability, our understanding of technology, we believe that we can kind of create new lines and ramp them up in as little as 3 months. So we hope to be able to maintain these kinds of capacity utilization rates for our existing as well as new plants going forward.
Okay, and Mr. Rustagi, talk to us about the demand and how sustainable this demand looks once the ALMM DCR-driven orders taper off, and what portion of your future demand growth will come from rooftop versus utility scale?
Yeah, so look, I mean, the demand outlook is actually very, very positive. Demand in India has been growing at more than 50% annually over the last 2 years. We believe that with the government support for the rooftop scheme, for the KUSUM or the solar pump scheme, open access market reforms, etc., we believe the trajectory remains very strong. In fact, we are expecting the volumes to go up by something like 9 to 10% per annum annually over the next 10 years, wherein the total solar demand by 2035 should touch about 126 gigawatts. For our business, we are present across all market segments, and rooftop solar and KUSUM currently account for about 20% of our total business.
And if you could also help us understand, Mr. Rustagi, what gives you the confidence that your BESS, inverters and transformers can scale to contribute 25 to 30% of revenue in the next few years, like you have recently informed? What is driving this sort of confidence?
So look, all these are, if you look at batteries, if you look at inverters and transformers, these are all products which go into solar projects. They're very closely aligned with a business. Like I said, the solar sector is poised to grow very strongly. We expect, there's a huge demand for batteries. The government has projected about 40 gigawatt hour of battery demand every year. Every solar project needs inverters. every solar project needs transformers. So if you look at the normal trajectory, the overall demand supply scenario in each of these markets, we believe there's a huge growth potential wherein in total these products could account for about 25 to 30% of our total revenues. Sorry, I also just want to add quickly. I mean, your last question was about the ALMM and the DCR module demand. Actually, the DCR demand is not going to taper off. Indeed, the entire market, the entire solar market is going to turn towards DCR modules over the next 1 to 2 years. So the demand is here to stay. Demand is going to be catered fully by the Indian manufacturers, and that is what gives us the confidence to invest in our new capacities and grow our business.
Right. The other thing I wanted to talk about was your order book as well. At 13,200 crore rupees now, how is it that you're managing pricing pressures amid falling global module prices?
See, one thing, as I said, is the demand is growing in the Indian market. Second, what we find is that despite the growing competition, clients prefer to work with tier one suppliers like us. We command a premium in the market over other suppliers. Second, we also enjoy a lot of competitive advantage because of a higher scale and backward integration. And that is why, we have been able to run our plants at 75 to 90% capacity utilization and earn better margins than most other players. And I expect the same thing to continue even going forward.
Okay, so that sounds good. If you could talk to us about how much margin improvement are you expecting from backward integration into ingots and wafers? Any number if you could share?
Yeah, so in terms of the backward integration, look, I think it is difficult to share any precise numbers right now because, it all depends, one, on overall market demand and supply. Second, what is the government policy going forward for ingots and wafers? We're still expecting for a final policy announcement to come out. But suffice to say that there is a large Capex program, something like 5,500 crore rupees in this segment. And we will be making a prudent business call in terms of investment, depending on government policy and the demand outlook, hoping that we will be able to earn sufficient returns to make this business attractive.
Okay, and let's talk about your Capex pipeline. It's quite robust. How will you be balancing internal accrual funding while maintaining a net cash position and healthy liquidity, given that you have very robust Capex plans?
Sure. So yes, you're right. I mean, we have a total Capex of more than 11,000 crore rupees over 3 years, as I said. We also have a very strong cash position because we've been kind of, one, we did an IPO last year, and second, we've been kind of hugely cash positive, on an ongoing basis. So we have a strong cash position. We expect, to generate, to meet, I would say, more than 50% of our Capex through internal accruals over the next 3 years, which means that the overall balance sheet will stay very strong and healthy. And we will have a little bit of remaining requirement will be met through debt from external sources, which, by the way, is already tied up.
Right. And lastly, as more domestic players scale up under, PLI schemes, what is Premier Energy's strategy to try and defend and grow the market share across modules and cells?
Yeah, sure. I think that's a very good question. Look, I think this is a growing market. A lot of new players have decided, have announced entry into the business, and we welcome competition. I think, we've been one of the largest players in the sector, as I said. We continue, we want to stay ahead of everybody else. So our strategy basically around focuses on 3 main pivots. One is scale. So as I said, we are expanding our capacities to 10 gigawatt plus. We are also integrating backwards to become a fully integrated player, again, giving us a huge cost advantage. And third, I would say, is a very strong balance sheet. This is a very capital intensive business, and players with strong balance sheet, low debt levels, and an ability to invest in new technologies and upgrade their plants will always have an advantage over the rest of the competition.
Okay, on that note, Mr. Rustagi, we'll let you go. Thank you so much for your time today and for sharing your growth outlook so candidly.
Thank you. Thank you for